Hey, welcome back, everybody. Hope we don't have double volume. Here we go. What's up? Good morning, friends. Hope you're all doing great. We got some rebranding to go through. It's no longer Pump Town. It's now Good Morning, Friends. Everything is going to be GMF from now on. Good morning, friends. And it's always morning. It doesn't matter what time it is where you are, it's going to be morning somewhere. See? It's morning for Rick. Good morning. So let's pat ourselves on the back and peacock around the house. We're still here. It's August. It's been absolutely garbage price action. And it's not like there wasn't some movement at unfavorable times, but, for the most part, it was still lame. So this is going to happen in around Christmas time. So we're just gearing up for what's anticipated to be rather organized price action coming up, and some things that you can prepare for from now till about, let's say, the third week of September. Get into a routine of keeping it simple. Take a couple of weeks off, replenish some mental capital, get yourself grounded. Because, look, the reality is you're likely pissed off and you're spent. And that's okay. It's all a part of growing. So if that's you, and just ask yourself and be honest. If you're having troubles, if price action feels like it's been punking you the last little bit, then it's not shameful to take a little break. It'll do you so much better. I promise you it really will. And in that time, we're going to prepare for some fun coming up. So with the next few weeks, you're going to see very, very little trades from me, but a lot of price bullying. So what ends up happening is you go from big wide ranges. Remember a few months ago, we were getting these wide ranges, 1,000 tick runs. I think I hit a 2,064 tick run for me. And then we went into some chop, and it just got really lame. So this is where you dial your risk back. You're not putting up tons of contracts. You're not looking for big home runs every day. You're just looking to be content for a while. And so when you get trapped in that state of mind, once you get trapped in a scalper state of mind, it's really hard to put yourself in expansion mode afterward. So that's what I'm going to help you prepare for, because likely we're going to get some runs here. So first, let's spend the next few weeks building confidence in your abilities. And it's not just your abilities to get into a trade. Your ability to spot chop, your ability to forecast terrible New York AM sessions and maybe waiting till lunchtime. Okay, you're going to thicken these responsibilities you have within these next few weeks. Now, don't click a single button, okay? You don't need to. We're going to get some really fun price, really easy to read coming up here. So just don't spend a lot of time clicking buttons. If you're offside, I want you to spend time figuring out how you would have gotten into that trade. Like, for example, if you were bullish on the market and it drove the other way, and let's just take a look at this guy here, this 4-hour chart. Let's just pretend it was a 15-minute. Say you were, in on a dip or an order block, something, and it was ripping up, right? And then it decided to turn the other way. Well, what would you do? because clearly you can see where price is likely going to gravitate toward. If it flips your PD arrays, then yeah. But figure out what was it that you could have keyed off on here to get short once it's proven to you that it's not in your favor. You can do this in any time frame, doesn't matter. This works well in a 5 or 15-minute chart. So in other words, between typically 7 and 11 a.m., you're in your trade. If it comes back on you and it's not chopping and it shows you a willingness to run, study how would you have gotten in on it the other direction. Because when you first come in and your model hurts you or disrespects you or doesn't do what you tell it to do, you feel like you're just like, ugh, but you're not looking at what could be next. So it'll help with just managing emotions in the moment. Because if it's going to run to a pool of liquidity, it's going to make your thing. It's going to make several things that you recognize, but you just got to be calm. So that's one thing. Another thing is directional bias, daily bias based on the IPTA data range and the current dealer's range. So it's just something that you get familiar with over time. And also risk management, being like, okay, my order block or my fair value gap was X amount of ticks. I wanted 3X that risk, and each array that you're keying off of is going to give you a different amount of drawdown, but use that as your base take profit. So in other words, if you had a 60 tick drawdown on your order block, use that as multiply that by 3 and take 180 ticks as your take profit. Growing into time stops. So if you were looking at, okay, my model materialized, it was a gain, what time did price make the high of the day? I want you to start journaling that the next few weeks, okay? Hyper journaling. I want you to write in your journals, not every day is a trading day. I can't drive this home enough. And so let's take a peeky poo at what I am anticipating unfolding in the marketplace. So we've got this like little series of candles in here, and it does look like order flow is bullish, at least temporary. I do see that the commitment of traders is in a sell program. So typically you rise above old highs and then slam down. So I've been waiting for a really violent, ruthless slam down for, I think, about 9 weeks or so. We just haven't gotten one. We did get this down close candle here. We did get this one here, but you know, these equal lows with this old week opening gap, I want you to have this annotated on your chart because this is where I see the next draw on liquidity. And this wouldn't be the worst. It'd actually be really good because if we can get down here into the better part of September, we could actually end up seeing a phenomenal fall and running into next year. So that's essentially what I'd like to see now. Just at the moment, I'm not calling a top. I want you to understand that. Right now, I'm just bullying price around. I'm not excited to trade every day. I'm really dialing it back the next few weeks. And I just want to see price gravitate toward just areas that I would like to see it gravitate toward. And if it does that, then great. Now, here's the thing. If I'm offside on this move, I have a specific price point in which I will deem myself offside. And that will be the upper quadrant of this wick. If that gets taken, then I'm offside. And I know it'd be like, oh yeah, well, look at it's already going up. No, it's like, that's just what it is. I will permit price to come all the way up into this swing high here. And if it does, it's got to prove to me this is my line in the sand here. Okay. So because of this swing high materializing, I would like to aim for the lowest low of the 3 candles that made that. Because there's this relative equal lows with this old week opening gap, this is a point of interest for me. So this is what we call external range liquidity. So just that swing low here to that swing high here. Anything inside is internal range liquidity. So this would be, oops, that was supposed to say previous week's low. So that right there, this is the previous week's trading candle here. That's the lowest low. And if you go into the 4-hour chart here, you will see if you just take that previous week low back a little bit, you'll see that set up so nice. Lots of bait here to come and take. And then that would be the catalyst for me to want to see a macro reversal. So just to burn that into your brain, looks like this. So just, I don't have it annotated because I don't see price wanting to come back up here quite yet. These levels here is where I want to find a top for the week and then start repricing lower for this week and into non-farm, so NFP. NFP, I would like to see a low here. If price is in agreement with me, I'm going to feel like a champ. I'm going to feel like I'm on side. I'm going to feel like the market is back to being well scripted and organized rather than running at unfavorable times, Asia doing stupid things, and London lunch doing stupid things. Like, you've seen the worst of it. You literally, the last little bit, have been through the worst of it. And I mean, in a weekly chart, it looks great, but no, intraday, it's been hell for many, many people. But this is where your risk management is going to kick in full gear here. Okay, so on a daily chart, this is what we're looking at. So really, I'm going back my 20, 40, 60 days and just figuring out where we are in the range. So that's 20 days. So we're literally at equilibrium. Because I have a short-term bearish bias, just a seasonal tendency shift, just an intermediate shift in structure here, I would like to see a rise up into a premium market. So just note that we are sitting at the midway point of our overall IPTA data range. And so if I was short, just temporary, just want to repeat, I'm not calling the top. That is a price point in which I would seem like I would want to find a top for the week and then start working in towards this double bottom here. Why would I do that? Because everybody else is looking at this as buying pressure. And although it could be, I don't see it like that. So yeah, anyway. Here's something dope. I know you're looking at this and you're going, wow, that's a nice bullish order block. Yes, I agree with you. But if it's got bearish order flow, it's going to snap through this sucker. And people would be like, how do you know when to use the wicks? How do you know when to use the bodies? How do you know blah, blah, blah? Experience, first of all. Second of all, you just kind of get a feel for it. If there's a certain profile materializing in the weekly time frame, and you've deemed, okay, I'm on side for this bearish bias for the week, then why would you be looking for a long at the bullish order block? Why wouldn't you want to railroad that thing, right? So that's the kind of mindset you got to have when you're going, oh, but it's bullish, could be bearish. Yeah, I agree. Look, I'm with you. This indigo right here could launch us to the moon. I'm with you. 100%. We're at equilibrium. I don't know where we're going, but I do know overall, if I go back 60 days, we're in a premium market. Pretty dang sure. 20, 40, and 60 days. So that's this candle here. So we are in a premium market. You go back further when you're in a lot of chop and it's not really clear. So overall, it's in a premium. So I would like to see it dropping. That's consistent with the commitment of traders and where the institutional orders are placed. Now that doesn't mean that we can't get a friggin' snap up and then come back down and make that Jesse Livermore cylinder and then freak out again. We've seen this many times, and just being prepared for anything. Now, a lot of the reason why I just chill out during the summer months is because it can be so unfavorable that it will make you feel stupid. Even though you're good at what you do, it will still make you feel stupid. But you're expecting that. You know that it's like that. Just like you know that it can run very favorably. But you have to know when it's likely going to be butt face. So this is my primary expectations. And these are going to be my practice targets for the next couple of weeks. And then we'll start working on bullish sentiment. God bless you all. Thank you all for joining, and we will see you tomorrow. Peace.